I don't think we're doing too much reshuffling. Hopefully, when you find good company, you can see a nice profile of growth over a period of time. Hopefully the company delivers on that over a period. So think of a company like MasterCard. MasterCard generating extremely consistent underlying growth over many, many years, and the stock price reflects that. So where we're looking at our companies, we're trying to find that consistent growth and then trying to think about what price to pay for it and not overpay.
As I look down the top 10 holdings here, it's interesting how much of a profile you have in the financials. Charles Schwab, 4.5% pretty much. MasterCard, that you mentioned, 4.59%.
Yep.
Alibaba's in there with Alipay,
yep,
of course, and
absolutely.
Prudential is also on that list. So you clearly feel comfortable that there is momentum still in the credit financial services story in the United States.
Actually, I'd talk about that on a global basis. If you look at those stocks, they're all financials, but they're not banks. What we don't invest in for consistent long-term growth are developed world banks, because they don't tend to have consistent long-term growth. You can make money in them, you can trade them, but that's not what we do. What we're looking for is those names like a Charles Schwab, which is a money machine. Every single month, it gathers a huge amount of extra assets for all those savers from 401ks in the United States and does something with that. It could be money market, it could be investment, but every single month you see growth in assets. It's a machine. MasterCard we've already talked about. The one I think is going to be fascinating and probably the biggest financial services company on a 10-year view is Alibaba through Ant Financial. And the interesting thing there is the Chinese consumer has done all its consumption so far on basis of cash. So credit expansion in the Chinese economy for the consumer so far is relatively de minimis. On a 20-30-year view, that's not the stage. Think of the US in terms of credit for individuals in about 1965, 1970. And think about what that did for consumption.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.